Welcome to this deep dive into the reasons behind Bitcoin's recent uptick of plus 0.54%, a modest yet significant move in the ever volatile world of cryptocurrencies. As we explore the intricate factors contributing to this rise, we must first understand the broader market context in which Bitcoin operates. Over the past few weeks, global financial markets have been navigating a complex web of economic indicators, geopolitical tensions, and investor sentiment. The recent surge in Bitcoin's value can be attributed to a confluence of factors, starting with the ongoing economic uncertainty in traditional markets. As central banks around the world continue to grapple with inflationary pressures and the potential for future interest rate hikes, investors are increasingly looking toward alternative assets, with Bitcoin being a prominent choice due to its decentralized nature and finite supply. The perception of Bitcoin as a hedge against inflation has been gaining traction, particularly as fiat currencies face devaluation risks. Furthermore, the recent positive developments in the regulatory landscape have played a crucial role in bolstering Bitcoin's appeal. Several key jurisdictions have made strides in establishing clearer and more favorable regulatory frameworks for cryptocurrencies, reducing the uncertainty that has long plagued the market. These regulatory advancements have encouraged institutional investors to increase their exposure to Bitcoin, contributing to upward price pressure. Another significant factor is the growing adoption of Bitcoin by major financial institutions and corporations. The integration of Bitcoin into mainstream financial services, such as payment systems and investment products, has added a layer of legitimacy to the cryptocurrency, attracting a wider range of investors. The rise in adoption is also evident in the increasing number of Bitcoin ATMs and merchant acceptance, making it easier for everyday users to engage with the digital currency. Additionally, recent technological advancements within the Bitcoin network, such as improvements in scalability and transaction efficiency, have enhanced its usability, making it a more attractive option for both retail and institutional investors. The introduction of Bitcoin ETFs in various markets has also provided a more accessible investment vehicle for those who prefer traditional financial instruments, further driving demand. On the macroeconomic front, the weakening of the US dollar has played a role in Bitcoin's rise. As the dollar loses ground against other major currencies, assets like Bitcoin, which are often seen as a store of value, tend to benefit. This is particularly true in regions where local currencies are experiencing significant depreciation, leading to increased demand for Bitcoin as a safer alternative. Moreover, the ongoing political uncertainties in various parts of the world have led to a flight to safety,